Let me also bring on board Ravi Muthukrishnan, Co-Head Research with ICICI Securities. Ravi, good morning and thank you for joining us. My apologies at the outset. We've come to you slightly late. How would you read into the current market environment? After a 500-point or a 600-point run-up on the Nifty, do you think the risk-reward ratio to buy into Indian stocks is still favorable?
See, what's happened in the last couple of days, or let's say last couple of months, is that the macros have improved dramatically. We see the GDP bottoming out. The CAD has been improving. Rupee has sort of appreciated to some extent. Of course, we have inflation slightly on the higher side, though core inflation, CPI core inflation has been coming down. So from the economic front, things have improved, and added to that is the prospects of a stable government forming at the center. Since last July, we've been observing day after day, the opinion polls have been suggesting a stable government at the center. And added to that, we have other pieces of information which points to that fact that there could be a stable government. All of this have added to the rally, and we expect this rally to continue for some more time till the elections are due. So anything in the range of 6,900 is what we expect. So that is based on the earnings number which we have for FY15, which is about 485 as against 491, which is the consensus. Now, beyond the elections, what can happen depends on whether the expectations have fructified. If you have a stable government at the center with substantial number of seats coming for the major party in the coalition, you would expect the markets to sustain those levels for another 3 months. But once the realization starts, or once things actually come into play, or the truism of what is going to happen comes into play.
And Ravi, as a house, your view now seems to be turning bullish as well when it comes to banking. Talk a little bit about, what your investment theme is when it comes to banking pack. Is it only tilted towards the private banking lot, or are you now venturing out into PSUs as well?
By and large, because of all the positivities around the stable government and improving fundamentals, we think the credit quality would improve. We think the liquidity should improve. Interest rates should soften, if not now, at least in the near future. And as a consequence, we are positive on banks, especially the private banks, and of course, 1 or 2 PSU banks. The name which we recommend in the PSU space is PNB. But as regards the private banks, we are optimistic about Yes Bank and Axis Bank. The reason for Axis Bank is that they have a sizable exposure to the infra space, and once a revival starts, I think they should actually do well.
Okay, block deal on Bharti Infratel, something what we reported and Darshan flagged off, a big ET Now exclusive. Goldman Sachs has sold part of their initial investment in Bharti Infratel, which is the tower arm of Bharti, and Goldman Sachs had entered into Bharti Infratel at a PE stage, so it looks like they are looking at monetizing some of their investment, 194 rupees for Bharti Infratel. Okay, Ravi, you mentioned that you like Axis Bank, but for Axis Bank, some would imagine that the demand-supply equation is no longer favorable. The demand was there and so was the supply. Last year they did a huge QIP. This year it's a Suti stake sale. So here's a great franchise, but the problem with that great franchise is that the buyers pretty much are loaded up.
I agree, but I still think there should be some upside to that stock. It has run up enough, though, in the last couple of days due to the FTSE rebalancing and the overhang of Suti. But I think still there's a substantial upside to this stock.
Ravi, how would you approach the oil and gas pack, especially in light of the EC's decision yesterday? Reliance, ONGC, Oil India, where would they figure in your investment portfolio?
By and large, if you see the diesel price deregulation has been a big positive. The oil price is coming down, rupee appreciation, all of that, plus the fact that in vote of account, the government of India said that the entire subsidy amount will be paid back to the OMCs. So as a consequence, we are slightly upbeat about the OMC space, especially BPCL in that space, though it's run up enough. But when you come to the gas space, yesterday, of course, the gas price announcement being deferred, there's a big setback for ONGC and Oil India. But we're still positive about Reliance for the simple fact that most of the investments in the refining and petrochemical space has not been well captured by the market. In fact, we expect another 30 to 35% upside in that stock moving forward. Though, of course, the gas price announcement is a slight setback for that stock.
But, Ravi, on an aggregate basis, Reliance has been a marked underperformer. Nifty is up 5-6% this year, but if I map the YTD performance for Reliance, it's down. So why is Reliance a big marked underperformer?
I think most of it has to do with the negative flow about the gas price issue, about the bank guarantees and stuff like that. I think nobody has given enough of thought to the investment they've made in the refining and petrochemical space, where we think that the earnings should be seeing a substantial upside from here on. In the next 3-4 quarters, you would see a substantial improvement in earnings, and we also expect that there could be some sort of re-rating in that stock moving forward.
Ravi, what is it that you're liking from the capital goods space?
In the cap goods space, of course, the best bet for us will always be L&T, though. And the reason why we talk about L&T is because it is the best company, a well-placed company, should the economic revival, which everybody has been talking about, actually happens. Though, of course, we do realize that investment cycle to pick up is not going to be that quick. But it's not a short-term story, it's a long-term story, though. Maybe 6 months to 9 months, the stock should do well, should the revival happen.
Ravi,
and that revival is not going to... Yeah.
Right, Ravi, so that's the challenge.
Yeah, go ahead.
Should the revival happen? Because as of now, there is no evidence that things have generally turned around for L&T. In fact, Mr. Nayak and some other senior management employees are selling their share in the open market. So that again could be an harbinger
exactly, yes.
of where the business is headed.
Yes. So since the market is riding on expectations of an investment revival, primarily from an election perspective, and because there is this positivity about revival, we have been talking about this stock. But like I said before, should the revival happen, if not now, if not tomorrow, if not, it should happen eventually. And when that happens, then I think L&T should be the best bet. It is not happening now very soon, that is for sure.
Ravi, what's the approach in some of the consumption, you guys? And Just Dial is something that you guys are bullish on, saying that it has a strong business model. That it sure does. But what's the argument and valuations? Is it a buy even at this point?
I think it should be, because that is one space. The internet space is one space which we think is the next bet for India. I think with a lot of people moving on to the net, I think most of the stocks in that space should do well moving forward.
My friend, Just Dial is trading at a P of about 70 plus, and seldom we've seen that this kind of a lofty P multiple will sustain.
That always happens with most of these internet stocks. I think 70, of course, as you rightly said, is slightly overvalued. But as I said before, it's a space which matters. If the internet space does well over a period of time, I think Just Dial should benefit out of that.
You also figure, Tata Motors as well as Bajaj Auto in names that you're bullish from. What's the argument then for Bajaj Auto? Because, most analysts, most market men that we've been talking, with, they're only bullish on Tata Motors, and that too because of the JLR story playing out.
If you were to look at it from the election perspective, Bajaj Auto is not a good play. Tata Motors is, because it is a high beta stock. What we have seen is in the last 4 elections, it is Tata Motors which has done well before the election. So Tata Motors definitely, besides the JLR story, is a good beta stock to look at from the election perspective. We like Bajaj Auto on a long-term basis because we still feel that the export market is good, where about it gets a substantial chunk of its revenues from exports. The quadricycle is a good thing going forward for them. So If the domestic story does not improve moving forward beyond the elections, I think then, or if the sentiments don't improve, I think the demand for or the revenues for Bajaj Auto from exports should hold them in good stead.
Okay, take a look at Bank of India. That stock has given you a very good breakout right now. In fact, it's been gaining for a fourth day on the trot. Not just Bank of India, Arvind Limited as well is holding high, while Bank of India is up by about 1.5%. Arvind is notching gains of about almost 2.5% as we speak, and it doesn't seem like the steam is going to let go anytime soon. But Ravi, cement as well is a space that you guys are bullish on. What is it that you are liking from the cement basket?
See, again, for us, it's somewhat to do with the election theme itself. We expect the stable government would mean that there would be a greater demand, better utilizations, better margins, and better revenue growth and earnings growth. And coincidentally, what you see here is that the pre-election period also coincides with the uptick in that sector. The sector usually does well during this period. And so what we feel is that companies which have capacities in place to take advantage of the rising demand will be the ones which should do well. For us, Ultratech is a good company to look at in the large cap space, and Shree Cement is a company in the mid cap space.
Apart from Bank of India, Arvind Mills is also exhibiting strong price action and volume action. Now bear in mind, folks, that Arvind Mills has been a very strong outperformer irrespective of the market mood. Arvind Mills has just moved from strength to strength. It is trading at 150 rupees now. So whereas IT is taking a backseat, select exporters are doing rather well, be it Arvind or Windo or Motherson Sumi. Ravi, I have a very basic question for you. If one believes that large part of the current market rally is a typical pre-election rally, how come markets are not taking notice of the problems within the BJP? The whole issue of ticket distribution, the equation between Modi and Advani. Can markets really afford to ignore all these noises or rather issues?
See, amongst the many parties which are now contesting, see, Third Front is completely disintegrated. We would expect Congress to have its own troubles. Our party to have any significant impact on the election, we'll have to wait and see. So the only party which should do well and should form a comprehensive coalition at the center at this point in time is BJP. So all these small issues which are lurking here and there are issues which are being actually kept behind. There are also a lot of people who are joining the party. Interestingly, some of the media persons, some of the journalists joining the party is actually given more credence to the party today. I think in that context, the small issues relating to ticket issues and all that are actually taking a backseat.
So Ravi, what's the sense that you're getting? I mean, we are at record highs on a numeric basis, 6,600 thereabouts for the index. How much more headroom up until the elections? And more importantly, what happens once this big event, which is already, the markets are beginning to price in a BJP-led government, is done with? Do we see a massive bout of profit taking then?
If you look at it from here on, I think the market should trend towards, say, 6,800, 6,900. I think that's where the pause will happen for the next 3 months, depending on how many seats the stable government will actually be able to garner in the elections. A substantial majority for the, let us say, the major party in the coalition would mean that some of the positivities may possibly happen. For example, revival of the economy, softening of interest rates may possibly happen. But should the major party do not get, let's say, a substantial chunk of votes and they have to get in more parties to form the coalition, then I think markets will start reacting to that, and then you will see a lot of profit taking happening. And that's the time when you will expect most of the money to move in from the high beta names into, let us say, for example, the defensives. So you could see a rotation. Yeah.
Ravi, at a time when markets are clearly in a high beta mode. Everyone is simply trying to buy into cyclical stocks to create alpha. How come ITC, HUL, HDFC banks are also holding on? ITC is up from 310 to about 350. HDFC Bank is sitting at an all-time high. HUL, even though it's an expensive stock, it has turned it up very smartly.
Talking about ITC, for example, I think it's got to do more with the sustainability in their earnings, which is actually pushing up that stock. And more than that, I think two categories in the FMCG space which actually do well during elections is one is cigarettes and the other one is alcohol. So that also to some extent has rubbed off on ITC. Coming to HDFC Bank, I think it's the quality which is making people to actually take a cautious position. So HDFC bank is becoming a good bet for them. What was the third stock you said?
I was talking about HUL also, which also has trended up very smartly. I mean, HUL is an expensive franchise, and if the underlying theme is revisit beta stocks, then HUL should have come down.
I think some of it is happening on the rotational trade. You see, the same thing happened with, let us say, Infosys as well, and I think to some extent happened with TCS as well. I think there are people who think that HUL or for that matter Infosys are available at levels which they can buy this stock. So that's the reason why I think HUL is going up. Otherwise, for us, HUL is more of a, let us say, a monsoon story, and it has highly penetrated products. So monsoon, we are not sure as to how it will pan out, but it's definitely not an election story though. I think it's more to do with rotation.
Okay. Ravi, final question. If you expect that the Nifty could go to 6,800 or 6,900 before election, give me one stock where you are confident of a 15 to 20% appreciation before the run-up. I'm going to keep the market cap and the volume constraint open. Pick and choose from the huge list of 6,000 stocks.
See, we had most of the stocks which I actually spoke about in my conversation with you, they all have an upside of at least 20+%. See, Reliance, for example, we expect a 36.6%, but that's a long-term bet. One of the good bets, if the government, a stable government comes to power, is IDFC. I think this stock can at least give you a 20 to 25% return before the election. The more clarity about stability, more clarity about growth, I think IDFC should do well.